Good morning, students. Welcome again to the new concept that is trial balance. Previous lectures, we come across with the transactions, journal entries, ledger accounts. So we refresh our mind with the memories of journal entry. Journal entry is a recording of business transactions, which is building blocks of double entry accounting method. Building blocks in the sense it is a foundation. Accounting starts from journal entries. Before that journal entries, transactions of that is raw material, and that was converted into journal entry, means processed with the types and rules of accounting, made into converting into journal entry. They make it possible to track what a business has used its resources for and where those resources came from. Simple to understand. When we received cash, we are debiting the cash. When we are paying the cash, we are crediting the cash. We come across with the knowledge of that cash is received from so and so. And when we purchase the machinery, cash is used for machinery. In the same manner, we record all the transactions in the form of journal entry. A small format which we already prepared from problem number 13 to 26 or 25 into this format. Date, accounts titles, narration, ledger folio number, debit amount, credit amount. This is a building blocks or foundation of accounting or foundation of double entry system. After journal entries are prepared, now we are moving forward to summarize those accounts. The summary of accounts is called as ledger. The summary of account is called as a ledger, which is having opening balance and we will find closing balance. All the accounts which are related to particular ledger or account were posted into or summarized into one particular account called as a ledger. So ledger is having date, description, journal folio number, debit amount. In similar manner, credit also date, description, journal folio amount, credit. So from problem number 28 to 32, I think we prepared ledger accounts. We balanced those ledger accounts. And Solkar account, Balaji account, Mr. Small account. Okay, like that we prepared ledger accounts. And we balanced those ledger accounts also. These ledger balances are posted into trial balance to know the arithmetic accuracy of double entry. Know the arithmetic accuracy of double entry. Okay. So trial balance is a small rough statement. It is a rough statement whether our previous work is correct or not. To know our previous work is correct or not. What exactly our previous work is? We prepared journal entries, we posted into ledger accounts, we balanced those ledger accounts. Which method we are following? Double entry method we are following. What is double entry? For every debit, there is a corresponding credit with similar amount. Debit amount is 5,000, credit amount also 5,000. So, trial balance is a statement which records list down of all the closing accounting ledgers of the company or entity for a specific period of time. Trial balance is a statement All the ledgers 200, 100, 5, 6, 7, 12 ledgers are there. All the ledger balances we list down, and in debits and credits we total them. At any cost it has to tally, because we are following double entry system where debit amount is equal to credit amount. These ledgers present in debit or credit based on the nature of accounts. What may be the nature of the accounts? All assets will show debit balances. Assets are showing assets balances are debit, and expenses balances are expenses ledger accounts balances are debit. Losses accounts balances are also debit. Assets balances debit, it balances I am telling. Okay, na? Balances ledger by accounts balances are showing debit. Expenses balances are debit. Those ledgers present in debit or credit. What are the accounts present in debit? Which accounts are present in debit? Those are assets, expenses, and losses. What may be the opposite to the assets? Liabilities. So liabilities, equity is credit. Expenses, incomes is credit. If such account and gains accounts credit. Okay. So what does it mean? Those ledgers present in debit or credit based on the nature of the account. So here, if the account nature is asset, example furniture, plant, machinery, cash, bank, okay, that will show debit balance. Expenses, salaries, wages, okay, those will show debit balance. Losses, abnormal loss, normal loss, like that, that is also shows debit balance. Those ledger balances in debit or credit based on the nature of the account. So, in same manner, liabilities and capital credit, incomes credit, gains also credit. So, trial balance is normally prepared in 5 columns, or 4 columns, or 3 columns, according to our convenience. Okay. So, the financial statements of the company are preparing in many different stages, from the primary records of sales, purchases books, to the general ledger, then to trial balance, and finally producing the draft financial statements. Can you remember what are the financial statements? Okay, trading account, profit and loss account, balance sheet. These statements of the company are preparing in many different stages, from primary records, sales day book, purchase day books, to the journal ledger, then to the trial balance, finally producing the draft financial statement. So from the trial balance, we were able to prepare financial accounts. Those are trading profit and loss account and balance sheet. Trading profit and loss account and balance sheet. Okay. So the stages of accounting starts from the transaction, okay, transaction, later journal entry, from journal entry to ledger account, to trial balance, to last is financial statement. These are the stages which we have to understand throughout our life. These are the stages which we have to understand throughout our life. Okay, what are the stage one? Transactions. After transactions, these were prepared in the form of journal entries. After journal entries, we are preparing ledger accounts. Ledger account balances are posted into trial balance. From the trial balance, we prepare financial statements. Clear? Right. Now we simply understand what is trial balance. Trial balance is a balance of all ledger accounts. Trial balance is balance of all ledger accounts on a particular date. When you want for 1 week, you can prepare. You want for 1 month, whenever you want, just balance the ledger accounts and put in the trial balance format, debit and credit balances, and find the whether they are balanced or not, tallied or not. The objective of preparation of trial balance is to know the arithmetic accuracy. Arithmetic accuracy. 20,000 debit is equal to 20,000 credit. At the end of the statement, 20,000 is equal to 20,000. Debit total is equal to credit total. It forms the basis for preparing financial statements such as trading profit and loss account, balance sheet. We already understood earlier. Okay. From the trial balance, we prepare trading profit and loss account and balance sheet. So trial balance is a basis for preparation of financial statements or financial accounts. Financial statements or closing statements. It presents the entire ledger in a summarized form. All ledgers summary is trial balance. Summary of all ledgers is a trial balance. Okay, it indicates that form. Next, trial balance can be prepared in two methods, total method or balance method. Earlier, we balanced the ledgers and to balance brought down, by balance brought down. That balances were posted. In case of totals method, all ledger totals, debit total and credit total, will be posted in trial balance. In both the methods, total of debit and credit in trial balance must be same. So at any cost, our trial balance should have tally, because we are following which method? Double entry method. The double entry rule is for every debit, there is a corresponding credit with the same amount. Just you find trial balance is tallied with 16,000. Okay. Cash is asset, purchase or asset, John is credit or liability. Sales are credit. Then the capital is also credit. Total of 16,000 debit is equal to total of credit of 16,000. Okay. Now we will solve the problem number 33 in our textbook. Problem number 33. Yes. Okay. So what are the debit items? Debit items are assets, expenses, and losses. Assets, expenses, losses. What are the credit items? Assets opposite is liabilities. Okay? Right. You keep your in problem in front of you and just watch how I am posting. First one is capital. Capital is liability. Capital. Liability is credits. Liabilities are credits. 24,000. Next item is opening stock. 8,500. Asset opening stock is asset. Furniture is asset. 2,600. Purchases debit. Remember, purchases are always debit and opposite are sales, always credit. Cash at bank. Amount is 7,300. Carriage is expense. 300. Sales. Credit. Sales are always credit. 22,500. Buildings are asset. Buildings amount is 12,000. Written inwards. Written inwards. We are getting the returns. Written inwards means we are getting. These are sales returns. Look at sales. Sales are credit. Sales returns are debit. Written outwards means we returned goods. Is nothing but a purchase returns. Trade expenses. All expenses are debit. Written outwards. Written outwards are purchase returns. Sometimes he will tell about purchase returns, sometimes written outwards. Written outwards means we are returning goods. Written outwards 350. Discount received is income or gain of his rent. expense. And the last one, salary, also expense. So we followed the method debit all expenses, losses, assets. Credit all incomes, gains. Understand this. The red color amounts are credited because of their nature is number one, this is for liability, this is for going out, and this is also going out, and discount received is gain. All these are debited because of assets, expenses, losses. Okay, we check the total. Total, we are totaling. We are using Excel sheet for total purpose. Okay, we can do automatic. 47. You see, debit total is equal to credit total, 47,820. 47,820. Okay, right. That is check with this total. This is total. So total of debit is equal to total of credit, which is telling the arithmetic accuracy. Okay, students. Okay, you try the problem number 20, sorry, 34. Try to post. Here I followed only simple rule, that is assets, expenses, losses. Assets, expenses, losses to be posted in debit. Liabilities, equity, that is nothing but capital. Incomes and gains are credit. Automatically it will tally. Okay. Right. Bye students. Take care. We'll meet in next problem.